hold on to those hats, folks. The stock market took a bit of a hit yesterday and may continue tomorrow. Renewed concerns about the banking sector sent investors into a little bit of a tizzy, despite digesting the Federal Reserve's decision from the day before. Wall Street was feeling the heat with the major US equity indexes plunging, while continuing their downward spiral. The Nasdaq Composite, S&P 500 and the Dow all closed lower, with S&P 500 notching its fourth consecutive day of declines. Regional banks were the main culprit, with PacWest Bancorp plunging over 50% after revealing it was exploring strategic options. Meanwhile, Western Alliance Bancorp shed about 39% on reports denied by the company that it was considering a potential sale. And First Horizon's proposed merger with TD Bank hit a wall, causing the stock to plummet 37%. But the stock market wasn't on the only thing there on the minds of investors. Apple, AAPL, earnings were due out after the closing bell, adding to the excitement and the uncertainty at the end of the day. We'll get into that in a second. As for the Federal Reserve, they had raised interest rates another 1/4 percentage point the day before, emphasizing their data-dependent approach to future decisions. This led to buying in the fixed income market. But that wasn't the only thing on minds of investors. Of course, Apple earnings post-market adding to the excitement and the uncertainty. We're going to check that out and what it might mean for the charts tomorrow. As for the Federal Reserve, they have raised interest rates another 1/4 percentage point, emphasizing their data-driven approach to future decisions. This led to buying in the fixed income market. It wasn't simply that. They also announced yesterday that they were going to kick off a new series of quantitative easing, whereby they buy back government bonds, providing liquidity to an illiquid asset. Sent up a little bit of interest then in the fixed income market. Sent Treasury yields lower. 10-year yield slipped 4 basis points to 3.37%, while the more rate-sensitive 2-year declined 17 basis points to 3.76%. Despite these ups and downs in the stock market, one thing is for sure, it's always a wild ride, helped in no small part by Apple. There's the major indices, all of the equity indexes finishing down, VIX up, and similarly in the futures we see everything come to a close in the red, and UVXY again a little bit of a spike. So Apple helping with the ups and the downs all on their own, what with their large part in the S&P 500. For the period ending April the 1st, Apple's earnings came out and moved prices 1% in the extended hours. They generated $94.84 billion in revenue, with earnings per share of $1.52. One key driver of this impressive performance was the iPhone, which saw a 1.5% year-on-year increase, bringing in $51.33 billion in revenue. Although analysts had expected Apple to earn $1.43 per share on $92.84 billion in revenue, the company exceeded both of these estimates, with revenue from wearables, home and accessories totaling $8.76 billion, and services revenue rising by 5.5% year-on-year to reach $20.91 billion. However, the Mac and iPad segments declined, bringing in $7.17 billion and $6.67 billion respectively, down 31 and 13% year on year. Despite some setbacks due to COVID-19 lockdowns, Apple's revenue from Greater China still came in at an impressive 17.81 billion, down only 2.9% year on year as the country returned to more normal economic state. Apple also announced a $90 billion share buyback program, par for the course for Apple, and increased their quarterly dividend by 4.3% to 24 cents per share from 23. This is great news for shareholders as the next payout comes on May 18th. To find out more about these exciting developments, you can tune in to Apple's conference call, or you can tune in to Tradespotting. Hit that like button. Make sure to be here every day. Let's get into the charts and talk about the distribution of probability around which nodes we might find them and help you if you're trading tomorrow into close of the week. Thanks so very much for watching. Ooh, get those charts right into your veins. Here we have the 4 hour on the E-minis. You can take that as analogous for SPY and the markets at large. We can see 4 hour, you've broken below the 50 simple and the 200 period moving average. If you're looking from this low to this high, you can see there's a touch of divergence on the most recent peak. You have got bullish divergence in terms of continuation, but the trend may have broken. If that has, you've gone below the 236 and you've come very close to and tested 382. Go any further, you're looking at 4022. That's the 50% retracement, or a golden pocket where you see the first level of horizontal support in around 3980, 390. If you go up to the daily, that's the 4 hour. On the daily, let's zoom in a little bit, make this point. Along with that touch of divergence you have on the most recent high, again confirmed here in the higher time frames, you're at the 50 simple period moving average. There we go, as I get into the charts. 200 period moving average comes in around 390, 3980, 3990. These are very important levels, folks. And then we're on to the daily time frame. 200 period moving average down at 378, and a very simple there at 3990, 3980 again. So very strong level. Golden pocket retrace. Haven't broken 236. Catch all those moving averages. Look for support now that we've put in that divergent peak. Very, very possible, folks. Down to the 15-minute time frame. Zoom in. 1, 2, 3. Not so terrible there. Quickly jump over to SPY. Post market. Market closed. What are we seeing in the after hours? A little bit of a bounce from Apple, not so much. Not enough yet. Let's see what that share buyback does across the markets. And then a quick look at VIX because we're here. Managed to push towards that peak that we talked about in around 21 and change. Yes, 21.33. And now that again, also a little bit of divergence. It could be that then SPY doesn't break down terribly far. We know that the open interest nodes around 410 to the top side on SPY. There's also something in it around 405 to be aware of. And if that doesn't hold, you're looking down at 400, 401 would be a good area for a bounce. Slip below 400, you'll be looking at those targets we spoke about on the E-minis. So that is your little dose of the charts. Tune in for a live show. I'll have one after this, though it does take a while to get these ready. So I'll be on a live show after this. Jump over and see me. Thanks very much. Hit the like button. If you want to support the stream, you can do so using any of the links below on Patreon or just with PayPal. Thanks very much. See you next one. You can also be a channel member. Hit the join button. See ya.